Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day, I've been sitting in this waiting room, and I've been waiting on my friends, yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are, yes, I wonder where my friends have gone. Where'd they go? Tell me, where could they be while I'm waiting on this conference call? I don't know. Well, I'm holding on my phone, yes, I'm holding on the line. Hey! I don't know where they are, I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day. I've been sitting in this waiting room, and I've been waiting on my friends. Yes, I'm waiting on this conference call, all alone, and I'm on hold. Well, yes, I'm on hold. I hope it's not all day. Well, I wonder where they are. Yes, I wonder where my friends have gone.
Where'd they go?
Tell me, where could they be while I'm waiting on this conference call?
I don't know.
Well, I'm holding on my phone. Yes, I'm holding on the line. Hey, I don't know where they are. I don't know why I'm still alone. I'm on hold. Oh yes, I'm on hold. I hope it's not all day. Hey!
Well, let me tell y'all a story about a man who was on hold all day. Yes, he was. Now, maybe he had the time wrong, and maybe he didn't. There's just no way for me to say. And yes, I have seen some long hold times in my day. Yes, I have. And this was one of the worst. Now, this young man did not hang up the telephone, and you guess what happened? Yeah, that call began. That call started.
So stay on hold. You gotta stay on hold. Don't go away. Well, I've been sitting here all day. I've been sitting in this way.
One word. Ouch. I didn't see this one coming. Okay, so here's what we're seeing in the MBS market. So if you're watching me right now, you get it. When this chart right through here that we're seeing, this is a mortgage bond. When this thing goes down, rates are going to go up. This is a pretty big move. I want to go over with you guys. If you're here, you're a realtor, or you're a loan officer. If you're a consumer, I'm going to make this make sense for you. Hopefully, okay. So here's what we're looking at. This is the bond market. This is the immediate reaction to the Federal Reserve. Actually, the reaction was about right through here. But what I wanted you guys to see is as the Federal Reserve chairman speaks, we're going to have huge reactions. So remember, we're at minus 36 when this thing starts. So let's get over to Mortgage News Daily. We go through here. Let's refresh this, see where mortgage rates are. They're saying they haven't changed. This thing's going to refresh big time. So here's what happened. Here's what the Federal Reserve said. Okay, there's really nothing in here that would be like, wow, I didn't see that one coming. Because if you guys know that the Federal Reserve is cutting, basically everybody else does. So let me know what you think of this cut. Was it deemed good, bad, whatever? There was two people that dissented. One said there shouldn't be a rate cut. The other said there should be 2 rate cuts or something like that. So let me know what you guys think down there. Who do you think didn't want the cuts, and who do you think wanted the cuts? Let's get over to Eric. I'll get to you in 1 second, my man. So here's what we got. We got this, but there's one piece of the puzzle that we didn't really see. Well, we didn't see this one coming either. The markets are just waiting for something, and I've been telling you guys this for weeks. Something just to sell off. Okay, so there's a little bit of a sell off now. Anything to be concerned about? No, because we hit record highs every day. Here's what's happening, and here's the head scratcher. And this, when I got this news, I turned to Alan and I'm like, dude, this is actually good news. So I'm really not sure of the market's reaction to this. And I'll take a deeper dive into this and get back with you in tomorrow's morning opening bell. But here's what the Federal Reserve's doing. And there was people that posted down below in a couple of my videos, the Federal Reserve, they're going to start, do this quantitative tightening thing. And then they're going to start buying back mortgage-backed securities and all this, driving down rates. Well, they announced today that they were going to do the quantitative tightening, meaning they're not going to, I'll explain that in a second to you. But what they were doing is they weren't buying any bonds anymore. And quantitative tightening was basically they weren't going to buy any more bonds. They weren't, really weren't going to do anything with that money. They were just going to let bonds roll off. And it getting a little confusing, I get it. But what they're going to do now is they said, we're going to take the money as these bonds sell off and people pay off. So like when you refinance your mortgage piece of that bond that your mortgage is in, it pays off. So then that money gets distributed to shareholders. Well, when the Fed gets this money, well, now what they're going to do is they're not going to buy into the bond market for mortgages and things like that to artificially drive down those rates. What they're going to do, they're going to buy T-bills. Now, what bills are, they're short-term, basically maturities. So they can get the rates as low as they can. Pretty ingenious move there. So when I saw that, maybe the markets, what they were thinking of, and let me know what you think, is the markets were thinking, what? And there was a lot of people that did comment, the Fed's probably going to start buying back all these bonds. And I never thought that was the case, but maybe that's what the markets were thinking. Also, another piece of this puzzle, before I forget, there was just an analysis that I heard, is every 0.25% rate drop that we get, the government saves, and I had to write this down, $88 billion in interest. So then you have to weigh, okay, inflation, yeah, even Federal Chairman Powell, he came in today and said, and correct me if I'm wrong, he said this stands out because he said lived. Let me know if this English makes sense to you. He said, we know tariffs are short-lived. I would say lived. Maybe I'm wrong. Let me know if I'm wrong or he's wrong. But he even admitted it. He said, they're a little prolonged because of all the changes, but it's going to be a one-time effect. So once you hit that, price level goes up there and it stays there for a while, your inflation rate after that, after duration of time goes, basically stagnates. Okay, so that's what we're seeing. So when they came in and said they're going to buy, I'm like, okay, that's actually even better news. So not quite sure why the markets are tumbling like it is. Let me know what your thoughts are. There's got to be some loan officers on here, and there's got to be some realtors that know this business. And if you're watching me, because I have a slogan, folks, and this is where it might help you. If you've been sitting on the sidelines waiting for rates to, they're going up now, waiting for rates to drop after the Federal Reserve cut, You might have missed it again. So I created a tool right through here. So this is for homeowners. If you're a homeowner, you want me to track rates for you because rates, they're going to pop today. Okay. Because this deterioration in the bond market will send rates up at least 1/8%. So did you miss the bottom? I don't know what the bottom is, but let me track these rates for you. So if you're a homeowner and you want me to track rates for you and to reach out to you, say, hey, when rates hit X, I will reach out to you and say, okay, here's what your new payment would be. Here's how much your savings would be. Let me know. So check that out. Just put in your information. Let me know what interest rate you want me to contact you, and we will. So that's that piece of the equation. So let's get back to you. I really want to know your thoughts on this because I'm looking at this as good news. Let's forward fast over here, and I want to see how this reacts. Okay, so let's look at the economy. Right now, we have an economy with this, okay? And let's project now where mortgage rates are going to go. Okay, so this is probably the direction you guys want me to go. So the Federal Reserve didn't cut. Okay, so they didn't cut. So now let's look at where the federal funds rate is and where the 10-year Treasury is and the mortgage-backed security. And the reason why I'm doing this is we have to look over history. As the Federal Reserve cuts rates, and we know they're going to cut, how much is this going to do or what's this going to do for mortgage rates? Okay, so if you look at history, we go over to here. Okay, so here's what we're looking at. If the Federal Reserve cuts rates, let me blow this up so you guys can see this. And if you want to learn more about these, subscribe to my channel down below because we talk about this every day. And in my last few videos, what I did is I'm creating a rate sheet with AI because a lot of questions I get is, Dan, what's today's rate? And the rate, the quote that I'm coming up with is, it depends on where you're looking because Mortgage News Daily has an interest rate and Zillow has an interest rate and Redfin has an interest rate. All these places have interest rates. Why are they different? Well, it's marketing. So learn those differences. Subscribe to my channel, especially if you're a home buyer, realtor, loan officer, and learn the tricks of the trade when it comes to the real estate. But let's get over to where mortgage rates could potentially get to. Okay, here's where we're currently. Right now, the Fed just cut rates. Okay, so the federal funds rate right now currently is at 3.75 to 4. Okay, you can validate that anywhere you want. Let me know if you think that's where we should be. Did they do right by cutting a quarter? Should they cut a half? What should they have done? So the 10-year Treasury right now is trading at 4.0. It's probably going to tick up to 4.1. Let's get over to the 10-year Treasury and pull that up because that's running hot right now too. It's 4.05. Okay, so let's get back over to here. So it's basically 4.0. The spread between that and mortgage rates, because mortgage rates right now are 6.2, is 2.2%. Okay, so I hope this makes sense to you. Okay, so here's what we're looking at. Everybody's trying to figure out, okay, when a rate's going to get to 4. And hopefully I didn't really dash your dreams because I did a video, I think it was last week, and that was what it was. It was like I don't see any time in the future in the next 5 to 10 years that we might see rates at 4%. But let's continue on. So if we have a moderate cut, let's say the Federal Reserve cuts rates down to 3. Okay, I don't think that. Okay, because most analysts are saying they're going to probably cut this down to about 3.5. But let's say they go to 3. Okay, the 10-year Treasury, what it's going to most likely do because of all these scenarios is bump to 4.25. So what's that going to do for mortgage rates? Keep it at 6.25. Okay, so let's go to aggressive cuts. All right, now there's some massive aggressive cuts. We see the 10-year Treasury drop to 3.75. The spread's at 2. Mortgage rates, in the best case scenario right now, are probably going to hit 5.75. So the range is going to be 5.75 to 6.25. It's a pretty hefty range, but it's most likely the realistic range for you because when you go out and look at rates, the thing you're going to get is, let me go to my website. So here's what I did the other day. Go to my website, especially if you're looking to buy a house. We have a program right down through here, and I think somebody might have asked about down payment assistance. This down payment assistance loan right there here, if you're looking to buy, check it out. And the reason why people are getting this one is you don't have to pay it back. Here's what's happening if you're a home buyer. Be careful. And I have a video coming out on Saturday, how a lot of people are getting scammed by these big builders on artificially low numbers, and check out that video. But if you're looking to buy a house, this program, you don't have to pay it back. There's no lien on your property. There's no payments. You have to check it out. But let's go up to this section right through here in resources. There's a whole bunch of information. Folks, I don't do this stuff either. When I go to websites, I just go scroll to what I want to scroll to. But go to blogs. Okay, so I've been trying to meticulously go in here and give you things like this. Now, here's the intriguing thing. If you're trying to figure out what's going on with rates, I'm trying to figure out that as well. I'll get back to where I think rates are going to be, that range. But I want you to understand how mortgage rates work. So this is a compilation I did yesterday. And here's what I did. And there's a point to this madness is somebody calls in and they said to me, Dan, what is today's 15-year fixed rate? Well, how would you answer this? So if you go over and you just check your websites, a lot of times I use Mortgage News Daily, their rate's going to say it's 5.75. And then if you go to Freddie Mac, their rate's 5.44. If you go to Zillow, it's 5.25. Well, hell, why wouldn't you just call Zillow? Well, what makes up these numbers? I thought the 30-year fixed or the 15-year fixed was just an interest rate. No, folks, a lot of times when you're seeing this stuff, it's advertisements. So you have to really understand what mortgage rates consist of and what rate you get. And so that's why, if I was you and I'm looking to buy into this market or refinance or whatever, reach out to us. We can at least give you a consultation to go over. If you're looking to buy or build, we can go over the numbers with you, the true numbers. And that's why we call the website True, the rate update. We try to provide you the truth. Okay, so what you're seeing, you'll see a video coming out this weekend where D.R. Horton, it's breaking the news right now, how they basically are underestimating all the closing costs and things like that, real estate taxes and stuff, to make the house payment look so much affordable. And then once the people get in there and get their first tax bill, their payments in the situation we were going over, it went up $1,000 a month. So check out that video that's coming out this weekend, and check out our website as well. Right there here, you can apply for home HELOC programs as well as our RateWatch. Let's just go back over to here. Okay, so I know I'm spinning around, but where are rates going to go? So 5.75 to 6.25. That's where they're going to stay. So are you now at 7.25 and you're sitting there thinking, okay, where do I do now? Ask me some questions. Let's see what questions you guys have. Let me know if you think today's cut was would you have voted for that? Would you have voted for 50 basis points? We had two dissenters. One said no rate cuts, and then one said 2 rate cuts. And the 2 rate cut was the guy that wanted 5 rate cuts last time. So let's get to some of your questions. I'd love to answer and help out in any way I can. Dan, if I pay DPA second loan off, how soon do they report in order to be able to do an FHA streamline refinance? You can't do the street. You have to wait 6 payments. So if you have an FHA loan and you're paying off all that and you're consolidating everything together, you can do a streamlined refinance after 6 payments. It's basically the same thing with VA loans as well. There's a time period. Don't ask me why. There's just a time period where you cannot refinance during that time. But the great question. A lot of people are having that. We're getting a lot of calls in from people right now, the people that bought or built homes. And they locked in 2, 3, 4 months ago, and now they're calling us and they got a 7.5% rate. But they also, please be careful. You just built a home and you closed your loan with one of those big builders. Make sure your tax escrows are up to date. And if you don't know how to do that, reach out to us. We'd love to analyze your mortgage. Again, that's another thing. You can go to our website. That's another plug for us. So just go in here, ask Dan, or give us a call. What we'd like to do is if you close with D.R. Horton or one of those big builders, we really want to go over your escrow. So what's happening is they underestimated most of those people's real estate taxes. They use the vacant lot value for the escrows, and now the people are getting their taxes are doubling and tripling. Shame on them. They should have been explained that whole process. So that's that part of it. So that's what you have to wait 6 months. Next question: will this now drive down interest rates? Well, let's get back to that quote that we had right there here. So let's get to Jason. Jason, here's how this works. If you're new to my channel, we follow this bond right here. This is a mortgage bond, okay? And it says MBS right through here. It's mortgage-backed security. This is the price of the bond. As the price of the bond goes down, rates go up. Okay, that's the easiest way. I can explain how it all works. It'll bore the heck out of you, but just trust me. Bond prices go down, yields go up. Okay, so if you look at the 10-year Treasury, if the yield is going up, that means the price went down. Okay, so just easy correlation there. So that's how you do it. No, rates aren't going to go down. They're worse. You can see all these lenders down through here, worse. So please don't call us and say, hey, Dan, I know the Federal Reserve cut rates today. Can we lock in at a lower rate? Because mortgage rates went up once again. It happened last rate cut that he did last month or the before that, the rates are exactly the same this morning as they were last time the Federal Reserve came out and cut rates. We had a big dip right after they cut, and then rates basically stabilized and kind of flatlined for there. So if you're just sitting on the sidelines waiting for rates to come down even further, you might be sitting there for a while, folks. So schedule a consultation with us or fill out the RateWatch 2.0 trigger and put the rate watching mortgage rate watches on me. 10-year Treasury pumped. Yeah, the 10-year Treasury is actually doing nothing really. It's up 0.05 or 0.07. That is a pretty big, decent sized jump. So yeah, let's see what else we got down through here. We got would be nice to drive the mortgage rates down. Currently at 6.625. Love to get it down to 4 or 5. Hopefully, I explained it to you today. If we get in the 5s, probably as low as we're going to get is about 5.75. So don't think really it's going to go down anywhere from there. So let's look at it. Let's just briefly look at where's the economy right now. So where were we yesterday before the Federal Reserve cut? If you watch on CNBC, Yahoo Finance, any of the financial channels, everything is perfect. And I've been saying this for the last couple of weeks. Be careful. Things are a little frothy. The markets are just looking for some activity. I'm not taking anything off the board. I'm a long-time investor. I'm not a trader. So here, let's look at the economy. Right now, we got the employment numbers. We don't know how they are. Before everything shut down, ADP had a dismal number. The government had a dismal number. ADP's trying to come out with some numbers, but they don't know. Earnings reports. Earnings are fantastic. The AI trade is real. Okay, so you're seeing that. The tariffs, they're not as inflationary as everybody. Remember, they thought, oh my God, the inflation is going to skyrocket. It's going to be crazy. There was, I think, a Walmart. Yeah, the CEO of Walmart was on the other day, and they were saying, oh, prices of everything are up. And he said, honestly, our package of turkey, how we do this, it's down 25%. If somebody saw that video, let me know, because I know people are going to say I'm full of shit in this thing. So let's get to the next question we got. So if you're waiting for 4 or 5% interest rates, you might have the house paid off by the time you get there. So I'll wait all summer for interest rates to sell. I waited all summer for interest rates to sell. I told you guys there's no catalyst. I'm surprised we're down to where we are. Think of it. We have a government shutdown, world wars. So we have this economic boom on one side, but then we have a government shutdown. We have the world uncertainties. We don't have people going to be paid in 3 or 4 days. It's a mess. But then on the other side, you got millionaires being created every day. If you go to Yahoo Finance, let's just go over there for kicks, or just go to the stock market. Let's just Yahoo Finance is kind of cool, because at their beginning of their website, look at all this stuff, and you can go down through here, and it's going to tell you Nvidia $5 trillion. Let's see, Caterpillar stocks soar. This one plunges. GM lays off 1,700. One big question hangs over Trump. Nvidia accelerates. Yeah, I mean, so you look at all this, and up until an hour ago, the markets were thrilled. Okay, so now what's all of a sudden happened? You got the market selling off, and I don't get it. Let me know if you guys understand what the heck's going on. I'm thoroughly confused. I'm stuck here for the winter. Yeah. So hopefully you're not stuck. Looking to buy earlier in mid-December. Would you lock or wait? I don't think rates are really going to do much anything. So if you're on the fence to refinance, could rates go down another 1/8 or something? A lot of people, if you follow us on RateWatch, we do this thing on Wednesday. Alan and I, we didn't do it this Wednesday because of this, but we do that. We show you how we compare over 30 different lenders. Last week and the week before, multiple people were in the 5s. And I don't think a lot of people, they look at the Mortgage News Daily or one of those ad things, and they're like, no. Check it out. You might be able to get a rate lower than you think. The costs are probably not what you think as well. And again, reach out to us for a consultation. I'd love to help you in any way I can. Let's get to the next one. We was talking to Navy Federal yesterday about our loan that we closed on in May. The officer we spoke to didn't realize when the reserve cuts rates usually go up. That's why. Yeah, I'm glad you're here. And if you got another quote from Navy Federal or some of those other bigger places that really are there to help you veterans, send me your loan estimate, because I I've seen videos, and I've left previous employers because of the way they've treated people with especially lower credit scores, especially veterans, because they can tuck in all these fees. You can go up to 100% financing, and they overcharge you a lot of times. So just to, I'm not saying they all do, but just to keep them safe, check out, just upload your loan estimate into here. We can review, your offers, or if you want me to review your mortgage statement just to see if there's better things for you out there, just ask Dan right in here. Just shoot me an email, and I'll give you a secure link to send that thing through. So thanks for joining today. What's the next question? You said won't get lower than 5. Did you mean this year, or I'm saying in general? I don't think rates, if you look at it, let's go back to this. And here's what I want everybody to understand. The 10-year Treasury, okay, this is what we're going to monitor. They're expecting this. If it does really well, they're expecting this to go to about 3.5, maybe. The federal funds rate basically at 3.5. So the 10-year Treasury is going to be higher than that. Okay, so think of the federal funds rate is the most secure lending you can get. Okay, so that should be the lowest rate. Then the 10-year Treasury should be a little bit higher rate. This is how the yield curve works. The longer the duration out of time you have money, the higher the interest rate you want as an investor for that tying up that money. So if you have the Federal Reserve, the federal funds rate at 3.5, okay, it's going to be, say, in this range, okay? Then you have the 10-year Treasury. Let's say the 10-year Treasury gets to 3.75, so you're going to be in this range through here. What is that range putting us in? 5.75 to 6.25. This is 2026, is what these are telling us, modest and aggressive rate cuts. So yeah, this is where I'm saying this. So a lot of people, if you're qualifying right now at 5.99, can it go down an 8? Yeah, but it can go up just as fast. And you're seeing that right through here. Any news, this is, look at worse rate. If you don't believe me, this is what's going on right now as we're watching this video. You have banks coming out posting to us that the rates are good. So if somebody quoted your rate an hour ago, it's not good if you're using one of these lenders. Most lenders are going to reprice this pretty darn quick. What they're doing is they're kind of doing like I'm doing. I'm waiting for the press conference to go. And that's usually the really, really volatile time through here. That's why I'm trying to, crowd participation is greatly expected here, if you guys wouldn't mind, because I want to see how this goes throughout the entire press conference. And then at the end, but usually it gets really volatile. So let's get back to some more questions that you guys have. Let's see what we got. But yes, I'm expecting that in this year and next year. Okay. What's your mortgage story? Are you thinking about buying, refining? Oh, that's me. My apologies. Let's see. Fed sees something we don't see. They seem uncertain on dropping rates for December. Once shutdown is over, we may get very good news or very bad news. But I'm right on with you. We don't know what we're going to get. So you're going to go to the doctors. He might tell you that you're healthy as a horse, or maybe you have 3 months to live. We don't know. I don't know, that's extreme, but that's basically how the markets are looking at this. Here's what we got today. Here's the bond market that you guys are seeing. Okay. Again, going down is bad. What did the Fed come out and say today? Well, if you go over here, they didn't really say anything any different than they said last time. But they said they would end quantitative tightening. The only thing they said, they're ending quantitative tightening. They gave us a finite date and what they're going to do with the money. So what did the market think otherwise? I just thought, okay, it'd be great news if they did quantitative tightening. Let me explain what quantitative tightening and quantitative easing means real quick for you, so if you don't understand. Okay, so when we talk about bond prices, here's what it is. So what happened when the rates got down to like 2%, the Federal Reserve, they were coming in and doing what's called quantitative easing, meaning they're buying bonds. Okay, why did they buy? Okay, remember when I was saying as the price of this bond goes up, rates come down. Well, what would happen if I come in and said, I'm going to buy $40 billion worth of a product each month? What would happen to the price of that product? It would skyrocket because the demand would be out the roof. Well, that's what they did. So they drove up these prices to the highest levels. Here, let's go and show it to you. If they're here. Now that's all-time 5-year. Well, trust me on that one. So then they stopped. Okay, they stopped. Okay, and that's called, what they were calling quantitative tightening, was actually stopped doing that. Okay. And they were letting it run off. So as people would buy, the bonds would mature and everything, they would just kind of let it run off and the money just get absorbed into the system. But what they're doing now is they're going to take that money and they're going to start buying short-term bonds, which is a great idea. So I don't understand. They come in and said tariffs are a one-off or a one-lived. And then the jobs report, well, we don't really know. But the data we're getting in so far, ADP came in with a survey yesterday, and it's ADP. And they're saying there's about 50,000, what was it, 15,000 per week. So we get however that equates out to. So it's not bad. It's not crashing. But what they're saying is the stock market, the employment market isn't, people aren't being massively laid off. There's not, much hiring being done, but we're not seeing massive layoffs. And you guys might disagree with me, but this is what the consensus is saying. So let's continue on down through. And I love the information you guys are giving in today. So currently getting 5.125 with 0 points on a 15-year. Do I refinance now or wait for it to go down? Go down to what? I'm currently, so I get it. So Prodigy, do me a huge favor if you would, my man. You're on the show today. Send me your loan estimate right through here. What we're going to do is just make sure you're not getting taken advantage of. So if you're a loan officer out there, folks, I'm not trying to step on your toes. What I'm trying to do is weed out all those bad lenders. And we know them. We know you might have been there at some of these. Some of them are just sweatshops, and they just want. It's like it's watch Boiler Room or what's that other movie with Leo DiCaprio. So sorry, I'm off on the tangent. But send us your loan estimate right through here. We're just trying to keep people in check. If I'm saving you $500, stay with the loan officer you got right now, because I'm not trying to steal any business. But if you're getting hosed, we'll let you know, and we'll be the first ones. I'll probably call you personally and say, hey, we need to talk. So check that out. Let's get to the next one. What do you got? If I have a rate at 6.75, should I refi if my current lender is giving me 5.95 with 0 points? Okay, so here, I'm going to take this one. Caesar, I'm going to use you as an example, my friend, and not trying to embarrass you or anything. And I'm not going to embarrass you. You said 0 points. Well, how much is the underwriting fee or the processing fee or the admin fee, the lender fee? If those are 0, might not be bad. Reach out to us. But here's what I want you to do. Send me that quote, because a lot of times you might look at it and say, okay, that's fantastic. But did you check out the D.R. Horton issue that they just got into? D.R. Horton just got sued, and they're the largest builder in the whole U.S. And what they were doing is them and their preferred lender was kind of in on something to when they had borrowers coming in to buy. They're pitching them this rate or this payment that you're like, how in the world do you get that payment? Well, now that the people are getting their first payments due after they bought the house and closed, they're like, wow, I should have looked into this. What happened was D.R. Horton's getting in a little bit of hot water for not really telling the people how much their taxes are going to be on the property. They were using the value of the property when it was vacant land instead of the value of the property when the house was completely built. So a lot of these people are getting tax bills now, and their payments are going up $300, $400, $500 a month. And that's why, a lot of times when you get these quotes from these preferred builders and preferred lenders and stuff, you got to be careful, because I have a YouTube video. Let me see if I can find it. I hate to do this on a live event, but it's LE Lies. LE Lies. Hopefully I'm on the top of there. No. Loan estimate. Here it is. Lenders hate this. How to spot lies in the loan estimate. And if people would have watched this, I dived into every cell. Folks, I'm here to tell you every little fee. I'm not looking to hide anything. You're going to find out sooner or later. But what they were doing is they were underquoting on what those their taxes were going to be. And now these people, I get it. They're like, oh, I can't afford this. The one guy had I did a segment that's coming out this weekend. His payment went up $1,000 a month. That's absurd. And now they're saying, oh, the builder and this. And well, you guys have to understand this as well. If you're a consumer out there, if you're a realtor, you're a loan officer, make sure our clients understand this stuff. Okay. Somebody else said, wait more for that rate, those rates to come down. Let's see what else we got here. Charging me title $2,000. So just so you guys know, you can shop for your title company. Okay, so it's in there. They're going to have a fee for $2,000, but again, send it to us. Okay, we explain this to you. You might have a relationship. Your brother, sister, cousin, somebody might work at a title company. We can use them. Okay, if you have an appraisal done already, we can use it. We just have it transferred over to us. If you have a company that right now that's just completely hosting you, we'd love to help. So let's get over to it. Let's see where this ended for right now. The MBSs are down 36. That's basically where we started this. Let's go over and refresh to see how this is going for today. So here's what I want to show you guys. One thing that I did on here. So I think I showed you, but you need to understand this before you start shopping for rates and everything else. Make sure you get the right rate quote. Okay, so when you're shopping around, this is crazy. We're going to make it simple for you. And in a lot of these, if you were getting a quote from us, we're going to tell you is that's your rate, that's why your rate is there, and then so forth. But here's the one thing, the biggest teach of this I can give you. When you're seeing these rates, please read the fine print. Okay, read the fine print because there's always something down there, like Mortgage News Daily. The fine print is that to get that rate, you have to have a 780 credit score, and you're putting down 25%. 780 credit score, 25%. That's probably not you. Okay, it might be you. God bless you if it is, and that would be your rate. If it's not, that's the best rate there is. So rates probably go up from there. So before you really I guess the best way I can put it is don't disqualify yourself. Okay. So let's recap it. Mortgage rates, they didn't really move. Actually, they're going up. The Federal Reserve cut rates. They cut rates by a quarter. MBSs are down 36. So mortgage rates are probably going to hit 6.2, maybe 6.25 right now. Do I see them rallying up to 7? No. Do I see them going to 4? No. And the reason being is the markets are going to stabilize off of this. The federal funds rate is going to come down. The Federal Reserve is going to have probably 2 more rate cuts within the next 6 months or so. You're going to have a lot of the Treasury markets working out. You're going to have the tariffs working out. But if you're sitting on the sidelines, you're not going to get that 4% interest rate within the next couple of years. And that's the reason why. So hopefully now you can understand what in the heck's going on with those and the whys behind it. So let's get to any other questions that you guys might have for me. And then I will be off and to start working on some of you guys looking to refinance. And actually, we have a lot of people trying to get pre-qualified for that spring market. So let's see what we have over through here. Wave appraisal and 125. So good job. Good job. So your title fees, you can't do anything. And if somebody says your title fees are $2,000 or whatever, they don't shop around. I mean, you might be able to save $1 somewhere or something like that. We have your best interests in mind, especially if you're coming to us, because we shop your loan with over 30 different. Let me just go back to who I am and what I do, folks. Just so if you're new to the channel or you got suckered in to come into this live event, my name's Dan Frio. I'm actually a federally licensed mortgage loan officer. What this means is, folks, I'm licensed in all 50 states as well as Puerto Rico. I've been doing this for over 35 years. And all I try to do is come out here and just give you what's really going on. I have no agenda. I don't know what your house price is going to do. I don't know if your house price is going to crash or rally. I don't know what mortgage rates are going to do. And that's why I subscribe. Every day I come out here. If you're a realtor, if you're a loan officer, you're a consumer, I'd love to help you. So we offer programs. I work at a bank that is this. We're set up with over 33 different lenders. That it's like a brokerage. I'll put it that way. The nice thing about working at the bank, we're licensed in all 50 states as well as Puerto Rico. So it's really cool. So the cool thing is when people call in, I used to be a broker owner for years. And what I always prided myself on was when people called in, I wanted to be able to give them all the options that I could possibly get for them. I didn't want to work at a bank and said, okay, I have this widget and that's the only widget I can sell you. I want to be able to say, you know what, if it's out there, I got it. So if you're an investor out there, you're looking for a DSCR loan, love to help. You're a first-time home buyer. You're looking to, first off, let's make sure your budget's in check. I got budget software to help you out. What's your credit score? What credit scores are used? How do you navigate? What programs are best for you? We'll get you pre-qualified. You need help finding a realtor? We can help you do that. Our goal is to help you basically from application to keys in your pocket. If you're looking to refinance, hopefully join us right through here. Join us Wednesdays. I'll show you exactly what the rate is, what the fees are. So let's get back to some more questions that we have. And Francisco, let's see what Francisco has. What do we got, bud? Currently on a 30-year FHA at 6.125, trying to be realistic. I hope it comes down in the send me your mortgage statement and email it to me. Here, Caesar, I'll give you this is my email address. Okay. Email me your mortgage statement and what your credit score is. I will personally email you back, and it's going to most likely be a video, and we're going to break down your whole loan. Okay. We're going to go over, and if you get with your mortgage statement, it's going to give me your address. So that'll give me all the information I need about that and be able to pull your title fees and everything. I'll get back with a detailed email, exactly what we can do. And that's exactly what we do here when you sign up for the RateWatch tool. Okay. So make sure you send me that, and I will be more than happy to get right back to you and tell you if it's a good idea to do it or not. Let's see what else we got here. What do we got here? My lender said he can buy down 4 points and get me 5. How can you can buy down as far as you possibly want. So, Anthony, I'm assuming, let's just assume the average loans out there is 300,000. I could be wrong. You can provide the information if you want. 4 points is $12,000 in interest. Think of it that way. You're upfronting $12,000 in interest. I wouldn't do it. Okay. You might retire within that time frame. The $12,000 is a long time. I wouldn't buy it all the way down there. Start refinance. Refinance now to the lowest you can get. I've refinanced 1 year in 2020, between 2020, I think, and 2021. You're welcome, Francisco. And I think two or three times. And I went, I don't know, the rates at the time were like 6.5. Then I went to 4. Then I got 2.6. So follow it down. Don't buy. I'm not a proponent. You can do whatever you want. I'm not a proponent of spending a lot of money to refinance. Okay. You're going to have costs that you just can't avoid. You can't avoid title fees. You can have your own title company or fees and whatever. You can use your whoever you want, but that's the majority of the costs and appraisal. That's with us. Okay. Most companies, that's why I ask, what other fees are they charging you? So when people come in and first thing they come in and say what the rate is, it's kind of, please make sure. I want to educate you. What is the whole package? Let's do one final conclusion here. What do we got? So we got the MBS is down 35. Still a head scratcher. Nobody ever answered my comment. Do you guys have an idea? Again, the economy is looking pretty. Let me know if I'm off my rocker. The economy is looking pretty good, right? You have the stock market hitting record highs every day. Now, you might say, okay, that doesn't mean the economy is doing good. Well, what else is going to tell us it's good? You have the employment numbers under 5. Anything under 5 is full employment. You have the federal funds rate. They just cut it again. So it's down in the 3s now. You have an unemployment rate that's not, all these numbers. The only thing we don't have is a government that's actually working for us. Okay. So, I wish they would just get back on track. I won't go down that avenue. But folks, hopefully from this video, you understand now why mortgage rates, I'm saying the lowest they're going to get between now and the next 6 to 8 months. Now things can change. Yeah. Things can change in a heartbeat. I'm saying my long-term view for the next 6 months, 8 months or more until we really get really solid data is we're going to have rates at 5.75 to 6.25. So that's what my thinking are. Let me know if you guys think otherwise down below. Let's see what we got. A couple more questions and I got to run. Current rate is 6, hoping points refinance it. Now, here's what you got to look at. How much that's going to cost you. Okay. So let's say it's going to cost you, and this is what we do on our RateWatch thing. When we send you an analysis, we're going to do the breakdown. I want your break even point to be this a year. Okay, so what's the break-even point? When you're going over a refinance, what are you looking at? Well, here's what I look at. Here's what it's going to cost me total. Here's my monthly savings. How many payments do I need to make before I break even? If it's less than a year, not a bad thing to do, because then next year, if rates drop, okay, they need to drop a little bit more, maybe if I've refinanced already, but if rates drop, I can do it again. And in most cases, you might be surprised at how little your costs are going to be. So my expectations are after this Fed cut, you're seeing how the markets are reacting. It's kind of similar to what we saw. Let's go back here. We saw in previous Septembers, July, August, September. What's this? August, September. Okay. Here's where we were last September of 2022. What happened? Drop. Then we go, this is probably August, September of 2023, drop. 2024, are we in the drop? So are we into it for this year? Well, if you're a homeowner right now, you can protect yourself by refinancing. If you're a home buyer, let's talk to you guys real quick. If you're looking to buy a house in the next 30, 60, 90 days, don't think you're going to have any issues with these things over here because don't really think they'll move all that much. Could they go to 6.25? Yeah. High range if things go crazy, 6.5. So if you get prepared to buy that first house or you're building a house, make sure you get qualified at 6.5, 6.75. Here's the reason buy. If you can qualify at that rate and that payment's comfortable with you using the right taxes and the right escrow, DR Horton, if you can, how about when you close, if you can get a 6.1 rate and the house payment's $400 or $500 cheaper? Probably be happy, wouldn't you? So make sure you get qualified at a much higher rate. A lot of times, that's what we do. We come out and say, okay, I'm going to assume your taxes are 5,000, even though your market's 4,000. Let's just make sure that we get you overqualified. And that's what we do here. So the Fed cut today. What happened is they didn't really change their verbiage. They are starting to buy back more bills, Treasury bills. Those are short-term investments, not bonds and not mortgage-backed securities, bringing down mortgage rates even further. That's maybe what the markets were thinking of. So I wasn't thinking that, but maybe the markets were thinking the Federal Reserve was going to cut more and they were going to start buying mortgage-backed securities. They aren't. So the stock market is kind of taking it on the chin right now. Bonds are as well. Mortgage rates are going up, and I think the whole cryptocurrencies and everything else are struggling today. So not a great day in the market. Still a head scratcher on why this is doing what it's doing today, because I thought this was nothing but good news, but this is how the markets do it. So hopefully they're more efficient than our what we're thinking. And but that's it for today, folks. So if you know what you think happened today, please post it down below. Love to know your opinions. And what rate would you like to refinance? Let me know your thoughts down below. The consensus right now is 5.99. Actually, you might be there now, or you might be there sooner than you think. Just check out our RateWatch tool. Just reach out to us because you might be able to qualify at 5.99, not paying as much money as you're doing with the other